For the past month, China and Japan, two of the three biggest foreign holders of United States debt, have been selling their holdings of US Treasury bonds. After a few decades, they've officially hit rock bottom. Foreign countries that own roughly 1/3 of the US debt have a variety of reasons as to why they're getting rid of it, but the subtext is undeniable. They no longer have interest in the US dollar. Hello and welcome to Eminent Investments. For today's video, we'll look into China's dollar dump and the increase in gold purchases amid the decline of the US dollar. Before we get into it, do give this video a like and subscribe to our channel. If you're done with that, then let's start. It takes a while for a global reserve currency to lose its status. However, China, the biggest importer of crude oil in the world, has now been transacting with Saudi Arabia for their oil via Chinese yuan. Other economies, just as Brazil, China, and India, are exploring alternative currencies in their transactions. The fiat dollar faces significant risks as China and Japan, which are the biggest US debt holders, are now reinstating their capital and would need safer possessions for investments. Metals such as gold and silver become the safest store of value, especially during times of severe economic struggles. In line with this, countries that do not align with the West have learned that in a snap. Unsurprisingly, China has stockpiled a huge amount of gold over the last couple of months and has hit an unprecedented achievement due to its precious metal reserves. Let's take a look at the numbers so you can witness how fast these treasuries are losing their rank as a completely safe investment. China's holdings of treasuries have roughly declined to 30% since 2018. As of the 30th of June, China's treasury holdings went downhill to $835 billion, which showcases a fresh 14-year dip. It's no lie that China, for at least over a decade now, has been selling US treasuries. But what makes it alarming is that recently, these sales have skyrocketed. Beijing has sold off at least 10% of its entire holdings of US treasuries in just a few weeks. In addition, it also cut its holdings for the third time in a row. According to the central bank official of China, Chinese holdings have become a progressively relevant geopolitical issue. Therefore, as tensions grew between China and the West, incentives for China became less for them to carry enormous amounts of American debt. Japan has the same history with China as well. Japanese investors' withdrawal of money out of the US Treasury market is likely to happen. Shortly after the United States imposed sanctions on Russia's reserves, it's no shock that China and Saudi Arabia, whose investments in US treasuries have decreased by 40% as of August, are now taking precautionary measures to guard their capital, remove themselves from US treasuries, and gain control over their assets. In what areas or assets do these countries allocate their funds? China bought a fair amount of gold at unusual prices and has continued to do so. Their central bank continued to purchase gold for 10 straight months. China's explanation for its endless purchases is due to its main goal, which is to diversify its reserves to avoid economic and geopolitical risks. The country has set a new high record as it added approximately 7 million ounces of gold reserves. An analyst at a financial trading platform, FXTM, states that it's not possible for the People's Bank of China, the country's central bank, to advance its reserves as China attempts to decrease its holdings in US debt. In order to do that, their holdings in other assets need to increase. Luckily, in the current environment, gold is a very rare, high-quality credit asset. The idea of shifting away from US dollar inevitably weakens the global reserve currency, especially when every month, the Federal Reserve has been issuing record amounts of its debt on the market. This would make the global reserve gradually lose its power, and of course, as the US Treasury keeps sanctioning foreign countries, it becomes too much for these countries to handle. Numerous central banks have been expecting the shift from the US dollar to gold reserves. The World Gold Council, for instance, released a survey revealing that most central banks expect a decrease in the reserves held in US dollars, with an estimated reduction to 40 to 50% over the next 5 years. However, the very same survey also showed that 7 out of 10 central banks believe that gold reserves will likely increase and dominate in the next 12 months. Our 2023 survey showed that 24% of central banks plan to improve their holding reserves in the next 12 months. In addition, central banks view the future role of the US dollar as something rather negative than in the previously conducted surveys. On the other hand, the reviews indicate that gold's future has been positively set in stone. A 62% result would say that the gold metal will likely have a greater share in the total reserve this year as compared to 46% last year. Global Times stated that the global de-dollarization trend has been accelerating, and this present gold rush has no plans on slowing down. De-dollarization has been the main driving force of global central banks' gold purchases and is expected to continue in the coming months. This valuable metal will aid in diminishing external risks which they actually have no control over. Well, that's about it for today's video. If you like today's content, make sure to subscribe to the channel for more. Thanks again for watching, and we'll see you on the next one.